All right, we are live. Welcome back to Stock Tricks with Nick for this week's midweek movers. Pretty wild market, as all of you guys probably know. We got some short squeezes going on. Probably I I think it is the largest short squeeze in history. I need to check that. Probably maybe not on a dollar amount, but price wise, definitely with GameStop, uh, AMC, and BlackBerry going on with the Wall Street Bets thing. We also have giant earnings news with Tesla, Facebook, and Apple all reporting earnings after the close today. And we went from a market melt up where uh, we were getting extended from the bases, all the stocks that were breaking out and holding those breakouts were basically just kind of building on to each other, and the market just melted higher. And then as you start to see that, you start to see some cracks in the market, starts to see that weakness, and now you're starting to see the stocks come back down. So if you follow me on StockTwits or Twitter, the last couple days I was covering what I was seeing in the market, some warning signs, why I was getting so defensive with my trading, either with stops, position sizes, or the hedge that I put on with SQQQ. So definitely follow me on StockTwits, that's Stock Tricks with Nick there, and Twitter, Stock Trick Nick. And if you get anything out of this live stream, please leave a like on the video and subscribe to the channel, Stock Tricks with Nick. So let's just jump into the madness, short squeezes. Let's jump to the charts of a couple of the names we got going on. So I guess I have AMC up already. So we see up 300%, 1990 on the day, largest volume in the history. And the wild thing is the lower Bollinger Band, and I'll point this out with GameStop too. So Bollinger Bands are 2 standard deviations away from the 20-day simple moving average, usually to kind of see when a stock's extended, starting needs a pullback, or when a stock's been sold off too heavily and then needs to bounce back. You can follow those Bollinger Bands, and typically it trades within a channel. 95% of trading will happen within the 2 Bollinger Bands because they're 2 standard deviations away from the moving average. The lower Bollinger Band on AMC is at -$4 right now, which is, I mean, it's possible because it's just a measure of the volatility, but that's showing you how crazy the breakout's been on, and the short squeeze has been on AMC. But right now down 26% after hours. We'll see if that holds. I saw some rumblings on Twitter about them shutting down Wall Street Bets. I don't know if that's true, but that's probably going to make those guys even more upset. But GameStop, another one that went from, I mean, just last week, it went from a high of $20. Now you could see $347 closing today, down 15% after hours, just under $300. But that's still, man, what an incredibly strong and entertaining move. Now, I didn't trade any of these breakout stocks, any of these short squeezes. It doesn't fit my trading strategy, and it's important not to have style drift. So as a swing trader with growth stock names, this was entertainment. It was really fun to watch. I was rooting for the small guys for sure. But for trading, I have to stick what I'm comfortable with, stick with what I know the best. So really interesting stuff here. Man, 134% after what has already been going on. So all I could say is when it flushes, it's going to flush fast. This isn't the first time this type of short squeeze has happened with Drys, DRYS. I think that was 2016. I think that was my first year out of college. But that went from $4 to $100 in like 4 trading days, and then within a week or 2 weeks, it was back down to $4. So you can make a lot of money with these short squeezes, but if you're buying at the top, I mean, there's a lot of risk involved. So too much risk for my blood. It could be halted. It could gap down overnight. Not my trading strategy. While entertaining, you got to stick to your strategy. Don't have style drift because It's much, much better in the market to be really great at one setup or one strategy than understanding and being average at all the different setups. What was the other one? BlackBerry as well. That one, another breakout. I did try. I did try and short this one and then took it off like almost immediately. I was like, that's not my strategy. So this is kind of why I'm saying that, because I got hooked on this one, looking at it, showing relative weakness compared to GameStop, and then a couple minutes after I put it on, I'm like, that's dumb. Don't do that. So those are the big short squeezes: GameStop, BlackBerry, and AMC. We'll see how those work its way out this week. Let's go to earnings now. So we have Tesla, TSLA, and typically, I'll get that out. Typically, as Tesla goes, the growth market has been going. So I've been using this as when we had this strong base, September to November, everything was choppy, right? Or September to kind of the beginning of December. Very choppy for growth traders, very frustrating market if you're trading the breakout stocks. And then once that got included to the S&P 500, that broke out, and just along with that, all the other growth names started to take off, and we had our most profitable trading from the middle of December to basically today. Yesterday, I hit my account high. Today, I was down about 1% because I was trading so defensively, and we'll cover that in a little bit. But watching their earnings, down 5% now. This looked like another pattern that, I mean, if it wasn't earnings, this could have been a nice flag breakout that we got on the 25th. But again, just after hours, down 5%. But if this holds and we don't see an immediate bounce tomorrow morning, because the market's been so frothy, the excitement, the exuberance in the market, the stocks always have to go up. Typically, once that happens, once you get the retail money in, the market will look for a reason to start pulling back. Now, I don't mean it's going to crash the market. I don't think we're going to see anything close to March, but if the market can come back, I don't know. I don't want to give a percentage, but I'll still be looking for quality setups. I don't want to be completely taken out. Well, I don't want to not pay attention to the market, because once the quality setups form up, I want to get in them right away. I don't want to be afraid to trade. But this is one sign that maybe with the big names starting to sell off after hours with earnings, we saw down 3% or so NASDAQ today. I'll jump to that in a second. Maybe it's time for a quick flush of the growth stocks. Apple down 3.3%. Zooming out, this looked like a nice cup and handle. So maybe it just flushes down to the 20-day or so. You got some volume support there, and then it can run from there. So we'll see how that goes. And then also, what was the other one? Facebook. I think this one was pretty flat, actually. Only down 2% after hours for now. We could see relative strength. This has not been doing well since the market flush we got on September 2nd. So those are the three big earnings. And let's see. Let me pop out the chat. If you guys have stocks that you want to see, I forgot to mention this earlier, leave them in the chat. I'll be getting to all those after I do kind of the stocks that I wanted to talk about. All right, so let's jump back to it. I wanted to point out QQQ. And again, if you follow me on Twitter, I posted this on Twitter and StockTwits yesterday. But where is it? Oh, I took it off. So if we zoom out, let's compare this chart to where we were in September during the last melt up and then the strong pullback. So we've been bouncing. We have the 20-day simple moving average, that's the green line here, and then the 8-day exponential. So we were bouncing between kind of the 20-day and the upper Bollinger Band consistently. And then at this point, instead of the trajectory being kind of the same 45-degree angle, this really started picking up. Things were getting overbought. And if you remember back in September, very, very specific stocks were breaking out 20, 30% in a day and holding those breakouts. So all the money was pooling to a very specific group of stocks. leading into that market melt up in September. Very similar looking chart, not as extended as we saw in September, but as we got this kind of candle marking the top where we pulled down, excuse me, we flushed during the day and rallied back up and closed above the upper Bollinger Band. Let me just move this, not this one. If I just move this circle over to the candle that we got on Monday, it did exactly the same thing. We were already bouncing between the 20-day and the upper Bollinger Band. We started to get some exuberance in the market, not a kind of sideways up action, but actually extending over the upper Bollinger Band. Then on Monday, we had that quick sell-off, rallied right back up into the close above the upper Bollinger Band, and then an inside day the next day, and then today we flushed down. So once we got that candle on Monday, all the positions that I wasn't profitable in, I took off. All the positions I'd been selling into strength portions of my positions, and then also moving my stops to entry or even higher. Just to, I basically didn't want to put on any new trades from a week ago that weren't going to be profitable once I got shaken out. So by using smaller position sizes, by taking profit on the way up, and then also on Monday, I started a hedge position by going long SQQQ. And I built that up again yesterday when we had some sideways action with the index. And that kind of balanced my portfolio. So I was lowering exposure Monday, Tuesday, and today I got taken out of everything but maybe 3 different positions, and all of them are very small. And they're now all hedged by QQQ, which might pay off tomorrow morning if the tech earnings stay lower. So a lot of concerning things. We also got that same kind of, they call it like market breadth, where only a specific number of stocks are breaking out. So you saw that with some of the renewable energy stocks, BLNK, that was up 30 something percent yesterday. That helps me out a ton. So you could have still traded in this market during the melt up, but it was important to quickly move your stops to entry. Only target the stocks that were getting the most volume during those breakout points, and to take some profit on the way up. So by doing that, even if I get stopped out of everything tomorrow, my SQQQ hedge, basically, I'm not looking to make any money tomorrow. But if I'm not even on that, I'm only 1.5%, 1.25%, 1.5% down from my account balance high, while the market's kind of blowing off some steam here. So I definitely missed out on some money on the way up if I kept all my exposure on and completely sold off yesterday, but you're never going to nail the top with all your exposure on. So it's better to trickle things down and then slowly add positions as the market rebounds from there. So that was QQQ. Let's jump S&P. It's not as impacted, down 2.4%, but this one hadn't had that kind of strength that the Qs did. So now we're well below the 20-day simple moving average. We do have a volume shelf and the 50-day right at 370. So maybe just a percent down or so from there might see some support. Or if we cut under that, kind of the last area of support down here, that'd be 354. So I don't know if we'll see that much of a flush. Ideally, we just get a 10% pullback or 5% pullback in some of the growth names, and then we set up bases and get ready to go from there. All right, so that was all the earnings short squeezes that I wanted to talk about. Should have said this earlier. Quick disclaimer, nothing that I talk about is financial advice. This is all for educational purpose only. Do your own due diligence before trading, and trading comes with financial risk. I do have 8 stocks. So I have a list of about 350 stocks that are in strong uptrends that I go through every day to see what's pulling back, what's tightening up, what could be kind of my breakout trade for the next day. And of that list, I only found 8 stocks that are even remotely set up to take trades tomorrow. So I'm not planning on doing very much tomorrow. If anything, probably just managing the remaining positions that I have. But I do have a couple setups that will kind of tell us whether the market's going to be bouncing back and then see some strength, or if these setups end up failing, then we might be in for a little bit stronger of a pullback. And then I did get some stocks requested. Let me write those down actually. CARR, HUYA, MGNI, and Microsoft. So I'll be covering all of these, and then we'll get to the stocks that you guys put in the chat. Whoops, wrong one. Okay, so in alphabetical order, not anything other than that, ALRM. So this one, we got the 200-day, the 50-day, and now we're under the 20-day and the 8-day, but starting to coil up and found decent support today. So we had a run of 90%. I think this still validates the high tight flag. Let's see. Yeah, so 90% up, 15% back. Did have a couple high volume sell days, which is a strike against the chart for sure. But has held up relatively well compared to some of the other growth names during this past week. Some sideways action Monday, Tuesday, and then today we flushed under all the lows in the pullback, which if you've been following me or if you're a subscriber, you know that I like to see a pullback that flushes out any stops that are at the previous low, kind of clears the deck for either one, the strong hands holding the position, or new traders, new blood to come in and take new positions. So with this one, we do have kind of a volume shelf here. I'm just looking for a break over Monday's high. Monday's high is 99.91. I would probably be just looking for a break over just the clean $100 to see if that has any strength. And like I said earlier, when we're looking at these breakout points, we also want to see volume come in right when the stock moves over that point. So if I put on this trade and I use a buy stop to say buy if it breaks over 100, and then I zoom into the 5-minute chart and no one else is getting in the trade with me, I'm just going to take the trade off, especially during this environment where we're seeing very large volume breakouts. All the breakouts that we see that aren't coming on large volume, they're squatting, they're reversing, and only a very select few names are working. So make sure you monitor volume during those breakout points. It's ALRM. Next we have APHA. Let's see, since the beginning of the year, this ran up 111% and then pulled back only 15%. So a really strong move, not many names getting out. So, sorry. Just switch that over. Not many people getting out. You can see volume on the way up, very aggressive, and then everything got nice and quiet during this kind of handle being put in. Pulled back to the 8-day exponential moving average and is held there really well, never closed underneath. And even today was flat on a day. You see it has a slightly larger upper wick, but really held up well. So ideally, if the market starts by selling off tomorrow and we can undercut the low from, I think that's Monday. So the low on Monday was 1188. If we can undercut that low and then recapture the high, and the high's 1341 right through here, that's buyable. Now that's a big ask, but when the market's this shaky, I'm gonna I'm gonna be waiting for the perfect setup to put any size on. Otherwise, I just won't trade. You don't have to trade every day, especially if the market's like this. Might be a good time for a vacation. We'll see how tomorrow plays out, but I have very little exposure and not planning on doing too much. But that's a name that is holding up really well. Look at the relative strength compared to the QQQs. Ideally, you'd get average true range coming down, but volatility is too high with everything right now, so you're not likely to see that. If you guys are enjoying the video, please leave a like on it. It helps me out tremendously. ARLO, I think I had this on the breakout watch list on Sunday. If not, I've had this prior, but strong move on volume through here. Everything pulled back, and then we got another move. I think this was 110%. Wait, no, from the low. 103. So 103% in 8 weeks or less, and then pull back 18%. So again, not a strong pullback. I'm always looking for strong breakouts on volume, and then pullback nice and quietly. This one had that first pullback, checked back again, and then today pulled back a little bit more, but I don't think we undercut that low. Let's check. 772, 775. So similar to APHA, if we can take out the low here, and maybe we do, this one just does need to flush, but it's holding up well enough where if we can take out the high from Monday, which is 853, that could be buyable through here. Or it just turns over and flushes. So that's why I'm only buying the stock on the way out where it's proving that it's strong in a weak market. I'm not just buying a pullback because who knows how far a pullback can go. That's ARLO. Next we have JOE. This one I traded, I think 2 weeks ago, last week. Got in on this candle with a break over the previous high through here. Had some sideways action, got a big volume up day through here. Actually sold some pre-market when it was up, and then got stopped out at the rest at my entry point. So that was me again, seeing a stock, getting good volume on that breakout, quickly moving my stop to my entry, taking the initial capital risk off while the market melts up. And if it reverses, then doesn't take out any of my initial risk. So that was one of the many stocks that I played that way. And I got stopped out of a lot of stocks, but by getting stopped out of your entry, you're not risking any of that initial capital, which is important. Today, really strong, 1.5% up. Less volume than the pullback days, which is concerning. Definitely a strike against it. And this one, it would be tough to play if we pull back and then take out the low, again with some volume, or take out the high. The high is 45.27. Maybe that's buyable. There is more volume in the shelf here, so maybe you wait until you can clear that at 45.75. But held up really well today, and zooming out, you got the 200, the 50, the 20, and the 8 all in the right order. So no one's disagreeing on the uptrend with that guy. Next, we have MDXG. This one, again, none of these stocks are like true market leaders, which is pointing you towards maybe this isn't a time that we go nuts with trading. Well, definitely not a time we go nuts with trading. But maybe the market needs a stronger pullback, set up those growth names for a more significant, not just a pullback buy, but an actual base to form up, because there's been very, very little bases forming. And that's one of the reasons why as the market extends, there's just less fuel for it to go higher with less bases. But this one, you can see all the volume with the move higher. I think this is like 85% up, cup, and then this has been selling off, but today undercut all those lows and then rallied all the way to recapture the 20-day simple moving average. But we are under kind of the meat of this volume here. So I'm looking at the high from the 13th, which is 971, as a possible test. So right through there, if you break that high, you also break through that the end part of the volume shelf there. MDXG, my apologies. OSIS is next. So a little bit thinner trading name for sure. Only 130,000 shares traded today, but it's forming a nice possible pivot with 3 daily highs this week, all around the same price. So this is one where, oh shoot, I didn't see this. Hold on, 28th. Never mind. Take it off. We're not trading into earnings. Did not see that when I put that on. My apologies. Next we have STEP, another thinly traded name. Very strong action. Not a high type flag. Only 60% up here. Kind of cup. Looked like it was going to be a cup and handle. It flushed there. We undercut the low from the pullback by, I think, 4 cents, something like that. Yeah, 34.61, 34.57, 4 cents. We undercut that low, so anyone that had their stop there got stopped out. another undercut today, but rallied back up. So this is one that's just holding up better than most, but I would be looking for a break over Monday's high. That's going to clear you of the 20-day simple moving average as well. And this is probably one that I'm setting alerts for, like I'm going to be buying, because I want to keep in the pattern of going through my list, setting alerts, for just basically going through my routine of trading. But we're going to be trading a lot more defensively. And last, we have VERU. Tons of volume on the way out. This had pulled back, broken out on another good volume comparative to the pullback day, then kind of went sideways. Today, did try a breakout, and that's squatted. I think it's also showing after hours here because E-Trade's all finicky. But I would just be looking for a break over today's high, 980, as a possible buy point there. Because this is a breakout that malfunctioned. So if we can get over that malfunction point, then maybe more buyers step in with more confidence with the move. So that is VERU. So those were the 7 stocks, not the earnings. We don't want to trade stocks into earnings, but those were the 7 stocks that really were the only remotely quality setups that I could find. So that's why, for me, I'm not going to be trading aggressively at all towards the end of the week. Might just take a nice long weekend of trading. So these next couple of stocks are ones that you guys wanted to see on StockTwits or Twitter. So we'll cover these 4 and then jump to the comment section of this video. If you haven't yet, put the stocks that you want to see in the comments. So this is CARR. This is one that had been in a very strong uptrend before. Just really clean, bouncing off the 20-day. One time pulled back to the 50-day. And since then, looked like it was kind of forming a cup and a handle, but today it's turned over. Man, that could have been really, what was it actually down? Let's see. So at one point today, rough estimate, 7%. Yeah, for a name that's been this just consistently in an uptrend, this kind of selling with this volume is definitely concerning here. Even if we rally back up here, we have the volume shelf, and once you close below some form of resistance, whether it be a volume shelf, a moving average, once you close below a level of support, it becomes resistance. So if this buys up, it's got 7% before it really gets through the rest of the resistance here. You could also see that volume is formed with the base here. So we'll see. It did fight back at the end of the day today, but yeah, well, not looking too great. And I don't trade stocks under their 50-day simple moving average, so this would be a no-go for me. HUYA is next. So let's see. Let's zoom out here. Lots of overhead. Does look one of my requirements for trading is the stocks in an above the 200-day simple moving average, and the 200-day itself is in an uptrend for at least 1 month. That's one of Mark Minervini's requirements, so stole that from him. It does look like this has been an uptrend for more than a month. It does have some room to clear the previous, I guess, rally point high here. I don't know if this is one of those short squeeze names, but looks like a blow off top here where we didn't get as many gap up days as you would like to see in a blow off top. So maybe this is just a check back before for going higher, but does have the high volume, like the volume spike on a day where you get a red candle close outside of the upper Bollinger Band. And this one it is what's called a red hammer, where you got the open, it rallied, and then it closed under the open price. So that's showing that a lot of sellers stepped in and shot this down at the highs here. They were feeling it was too far extended. So typically that leads to a pullback, at least to the 8-day, which would be about 5%, and then pullback to the 20-day would be 14%. So we'll see how that looks. Maybe not a bad one to put on your watch list to see if it kind of flags out here and then sets up to go. But I'm not buying a stock like this far extended from what would have been the breakout point. Let's see, that's 26%. Yeah, I don't chase stocks into breakouts. I either buy them right or not at all. Um, there's typically, when the market's healthy, there's going to be a new opportunity around the corner every single day for a quality setup to break out. So don't want to be chasing when the market's healthy because there's going to be another great setup that I can buy right. And when the market's not healthy and these setups are coming one out of 100 charts, well, I don't want to be buying that either. The market's unhealthy. So definitely better to be safe than sorry. MGNI, this is one that I got stopped out of my rest. What was that? On Monday as we flushed down here, but really strong action in this name. This is one that I'm going to be keeping an eye on. It looks like it held up relatively well today, only down 0.5%, down after hours. Let's see, is that 34, 50, 35? We'll see how that opens tomorrow. But I mean, this name, you got the 200-day, the 50, the 20, the 8, all in the right order. I played most of this breakout, sold the rest there, missed the peak, then had a trade in here, got stopped out, and then added the next day and kind of ran some of that up. So I like MGNI. It's been a good winner for me, but we'll see if this can tighten up or if it just keeps rallying and breaks over the high. But my guess is it'll need some time. And if you're already in the stock, then you have your stop either at your entry, depending on where you got in, or at a manageable loss. So I always keep my stops 5 to 7% from my entry point. So with that tight a stop, and then pairing that with my position size, which even when the market's healthy is 10% on an initial trade, every single trade that I put on only has 1% or less risk to my actual capital. That way I could be wrong many, many, many times before my account's actually getting hurt. And one thing that I do, I think I've mentioned this earlier, but one thing that I do when I'm 5% off my account balance high is I just take everything down to half size position. So instead of 10% position sizes, I'll take it down to 5%. And that way, if I'm down 5% off my account balance high, either I'm trading wrong or poorly, or the market's acting poorly. And either way, I don't want to be revenge trading and trying to put on large size positions when I'm getting proven wrong left and right. So instead of revenge trading and trying to chase back your loss, cut down your position sizes, take fewer trades, and just set alerts like you're going to trade a stock and just watch a couple go and break out before you start to get in the market. Because when the market starts flushing, even the best quality setups that start to break out usually get sold off by funds that are taking large losses to kind of soften up their P&Ls. So once you get that flush, the first couple names to go are going to get cut down, and that's just kind of how it goes. And we need to see a couple names break out and hold that breakout before I get comfortable enough to start using full size positions. And finally, we have Microsoft, and then we'll get to the ones in the chat. This had earnings yesterday, kind of did so-so. Was it after hours yesterday? I think it was. Yeah, because it extended up 4%, then closed. I mean, closed flat today. It's a strong move. Yeah, I mean, again, with the market this shaky, I'm not just adding when the stock's already above its Bollinger Band. Let's give this time to either tighten up, or if it goes without me, it goes without me. But I don't look for a one-day pullback that's still above the Bollinger Band to try and put on a new position. And like I said, a lot of the names that are strong get cut down just to soften up everyone's P&L. All right, let's jump to the comments. Earnings, Apple, Tesla, Facebook, covered that. XL. Yeah, so this is one that this type of move down, let's see, 43% and then 47%. So typically once a stock pulls back 25% off its highs after a move like this, you'll need a 8 to 10 week kind of base period where you'll get a couple like initial bounces and breakouts not breakouts, but initial bounces higher that will get sold off by people that got trapped up here and want to take the trade off for even. So usually you need to kind of trade sideways, couple fake breakouts, tighten up, and then go. And this is, let's see, 23 days, so about 5 weeks into the base. We'll definitely need some more time to tighten up. Keep it, maybe set an alert just under the 2350 high here, just to let you know like if this is actually starting to turn up. But I'm not just buying randomly in a base because a base can fail to the other side. I want to be buying on the way out here. And if you buy when it breaks over here, you got a little bit of a volume gap in the price before some people who are trapped even higher, about 20% in that move. So keep an eye on that. EH. Yeah. What a move here. Tons of volume on the way out. Not much of a pullback. I mean, 11% today, 15% after hours, but we're still 10% above the 8-day exponential, 43% above the 20-day simple moving average. So this has been holding up incredibly well. Another one that you want to see volume with the breakouts. This would have been a breakout point, or the next day when you got confirmation, you see the uptick in volume. This was doing all the right things going into that move. Does have this mini volume shelf here, so maybe some support here while the 8-day runs up, but we'll keep an eye on it. You don't want to choke off a trade that is, let's see, what is this up? I mean, 270%. Geez, maybe you do take some profit, but this is definitely one that is on my larger list of stocks, but I'm not trading randomly into the breakout. I want to see this coil up a little bit and go. But yeah, keep your eye on for maybe like around $70 to see if some support lands there. WTI. Yeah, so I'm always trying to trade stocks that are strong, getting stronger, and with something that's not even above its marches or last year's highs, not something that I want to be trading. I also stick to stocks that are over $5, so um, this just doesn't fit kind of my trading strategy, so I don't want to give any, I don't know. The strategy that I use to trade doesn't fit this characteristic, so I would just say I don't know enough to talk about this one. All right, OXY. 200 days just going flat. I assume this has a ton of overhead. Yeah, I don't know. You can, there's ways to make money in the market. There's 1,000 ways to make money in the market, but this is a no for me. I don't want to be trading a stock with that long term downtrend. DraftKings, yeah, DraftKings. I took off about half my position today. I traded that yesterday. Come on, DKNG. So traded half, or I started my position as we broke out over the high from the 21st here. Did so on volume, so I was thinking, all right, after this kind of action, kind of Mark Minervini VCP. So first pullback 47%, next one 20%, third one 12%. So things are getting tighter and tighter through here. So that looked exactly, I think Mark even posted that on Twitter, that this is one that he took. But I took half off as we broke under the previous day's low, and then I'll probably get stopped out of the rest tomorrow morning. But it definitely one that could work. Now we have 3 daily highs at the same price. So let's see, 56.77, 56.52, 56.69. So right along these 3 daily highs. I don't even know. Does that extend out here? No, not exactly. So break over any of these 3 highs, you're above the volume shelf. Then maybe this really takes off. So definitely want to keep on your watch list. I have half position, maybe even less, going. And if everything rebounds tomorrow and we just needed a couple days to blow off steam in the market, this is definitely one that could take off. I probably should have put this on the watch list, but good to point that out. AI was another one that I traded a day with a break over. I didn't draw that perfectly, but break over the high from the 25th. That looked like it was getting out on volume after an inside day. The previous day set up the trade really well. And then it squatted, and I took it off after we undercut the high from the previous day. Not alone, I wouldn't have done that with this kind of setup, but with everything going on in the market, I'm trying to get as little exposure on as possible. So I took it off. I think Leif took it off as well. He had this on his system. It looked really good because we undercut the previous day's low, we hit support at the 20-day, and then we overtook the previous day's high and the high from Monday. So in a world or in a market where things are working normally and not extended, exuberant, that kind of stuff, this would have checked all the boxes for a quality setup. So a good chart to study, but you can't just be trading one stock. You got to kind of understand what's going on in the market as well. Volkswagen, yes, thank you. That was the largest short squeeze in history. DOCU. I think this one rolled over. Let's see. Yeah, this one rolled over on heavy volume, now under the 50-day simple moving average. This looked good, coiling up a little bit, had a pullback on lower volume after a higher volume breakout, and then just flushed. So with my trading strategy, I have a stop of 5 to 7%, and no matter where I put this in this kind of range, it breaks that, so I wouldn't be holding it at this point. Your strategy might be different, and that is A-okay. Many ways to make money in the market. APPN, this was awesome. This was one that we put on the breakout watch list. Could have taken the trade on that pivot through there. I didn't hit that one, but after the inside day on the 15th, I used the high of the previous day as my buy point. That moved out on volume after the previous day had lower volume, so that was my buy point. Sold some into strength on this red candle and the rest on this upper wick, which if you hide the last 2 days, I look like a genius by selling it in here in this upper wick when we had a red candle that came all the way back in, and it did so on volume. And then we got short squeezes was